Hey, what's up, guys? Sam here, and I'll be doing the weekly review for the week ending in May 1st, 2026. So we still got a long time to go before the market closes, but I don't think anything's going to change here relative to what we're going to talk about. You are in a vertical market, so very straightforward in terms of what to do. Especially looking at the intraday price action, we've looked a lot at intraday price action in the Mastering the Trade room, and there's this pattern that I want to show you real quick. Actually, keep that in mind. I'll show it to you later in the video because I was going to sketch it out for you, but I can actually just show you in real time an exact version of the pattern that you need to be very aware of. In my opinion, it's the strongest pattern in markets. It's a pattern that's been repeating pretty much the last 4 weeks over and over on intraday charts, 5-minute, 15, all day. So it's a really important pattern. Stick around to the end of the video. We'll cover it in real time. Let's start here where we always start, which is going to be the indexes. So we're going to cover pretty much every part of markets that I think matters. You can probably guess where the video is going to end considering the verticality of the rally. So I don't expect too much change week over week because things have only gotten even stronger to the upside. So on the SPY, the SPY actually is now max bull across the board. So 100%, 100%. Triggered a trend buy the other day, so that means it pulled back to the daily 10 or close to it, so that reloaded it. And really what I've been seeing is there's just a colossal amount of flows into the market all month. And today being a new month, and then obviously, OPEX for essentially what is April OPEX or the end of April OPEX, the flows just continue, right? And when you get that, you get very, very shallow pullbacks, if any pullback at all. So there's really not a whole lot to cover here. Everything looks fantastic. This thing's going to register pullback buys every single time it pulls back to the 10, assuming the signals don't change. So I don't really see anything new to cover here on the SPY. It's just a very clean, dare I say, easy chart. As long as you're, only going with the flow, it is quite easy. John has this saying that the market is an equal opportunity dream killer, but I don't necessarily think that's the case anymore. I think it only goes up nowadays. So here on the Qs, same thing, same exact thing, even stronger. Trading above its daily 3 ATR, hottest sector in the market, went from 0 to hero. 20% rally in April. Not a whole lot to see in terms of just there's just been no back and forth. There's no movement, so there's really nothing new to cover. So I'm just going to leave this up for a second, let you digest what you see on the screen. I think it's all pretty self-explanatory, hopefully. If you've been interested in kind of checking out the buy and sell system that I have on the screen there, then I'm going to actually be doing a demo on that, I believe on Wednesday, actually, next week. So feel free, if you see an email, to stop by and check it out. It is the True Momentum buy and sell system. It's the first time Simpler Trading has ever done a true buy and sell system that actually plots buys and sells. So I'm excited to show you guys that. Aside from that, on the Qs, one of the most amazing charts you're ever going to see. Not even pulling back enough to give a pullback buy, but it's only a buy until proven otherwise. So not a whole lot there on the Qs. Everything is as good as it could possibly be. Pretty much I think every market that we're going to look at is going to be that way. So next up is the Russell. Same thing on the Russell. Double 100%. Not a lot of nuance. Not a whole lot to see here. No squeezes, obviously, but actually has a 4-hour for next week, so maybe that'll set it up. But completely aligned. Watch this one into next week. Maybe if the Nasdaq gets a little bit consolidating next week, if it has to consolidate a bit to digest the move. I do think that the IWM probably has already consolidated here and could be the one that leads next week. So it's always hard to say that because the market breadth has narrowed so much. But one thing that actually happened yesterday was that the market breadth exploded to the upside. So you had huge market breadth yesterday, vertical move up in the IWM, and that kind of patched a lot of the issues that I had been seeing around market breadth, because what I had been seeing was just one thing was taking everything higher. So this is the MAG7 index that we're going to look at. I'm going to include it in the video description. So if you're looking at the video on the Simpler Trading website, I'll include it there. And then if you're watching this on YouTube, then you can see it there as well. So this is the MAG7 index. This is all the MAGs, obviously all the MAG stocks. And one thing I want to point out here that kind of implies that this rally is just going to go forever is this squeeze. So while it feels like nothing is in a squeeze, if you actually look at the MAG7 as a basket unto themselves, look at the quality of that squeeze that you have there on the weekly time frame, right? You were in a squeeze this whole time. Squeeze, squeeze, squeeze. It stays in a squeeze. It's a high compression squeeze. It threatens to break short, and then it actually breaks long. This is actually a really common thing that happens with high compression squeezes. This is probably the biggest example of this dynamic I've ever seen, because if you keep in mind, this is Apple, Amazon, Avgo, Google, Meta, Microsoft, JPM. I threw in a little JPM in there for some diversity. NVIDIA, Tesla, and TSM. That's like trillions of dollars, 10 to 14 trillion dollars worth of market cap. Maybe more now, actually. Maybe just between, it's probably closer to 20. So it's a lot of market cap. And the high compression squeeze, one thing that is kind of interesting about them is they like to go from uptrends, break short, and then if they're still good, they actually will slingshot to the upside. So later on in the video, at the beginning of the video, I promised you that I would show you the most powerful pattern in the market. That one I'll show you next, but this is one that's worth noting as well, because this one also is very textbook. Now, it's not easy to kind of call them in real time, but it is something that you should be aware of. So again, I just want to point this out because I think it's valuable. High compression squeeze. Let's start with the uptrend. Uptrend first. High compression squeeze. Squeeze appears to want to break short. Squeeze stays in a squeeze. See how the squeeze never technically fired. It rounds out, and then if it's still any good, it'll slingshot back to the upside, right? So this is a really remarkable chart, right? You take out this high right there, you got all this energy underneath it, and this is under the most important parts of the market, right? So what does this mean? This means that tech could probably just trade higher forever, essentially, with this squeeze. So I just want to spend a little bit of time on this one because it's, one, the pattern is so textbook. Two, the potency of this chart is so large, right? It is only the MAG7 stocks, and this is a really powerful signal. So do not sleep on that one. It is a chart that you won't see a signal like this, because if I go back to the QQQ for a second, you see how the Qs don't actually look the same? The Qs don't have that weekly squeeze, whereas with the MAG7, they actually do. So pretty impressive stuff there. And worth studying if you're a student of the squeeze, because for those of you that might be new to the squeeze, if you hear the term high compression squeeze, you're going to think, well, that sounds like a good thing, right? If the squeeze is good, then a super squeeze would be even better, right? That kind of makes sense. But in reality, high compression squeezes have their own character. And what we just talked about there on the MAG7 index is the character of the high compression squeeze. They will take uptrends, break short, and then if the uptrend is still any good, then it'll actually slingshot back up in almost a vertical fashion. So I'll sketch it out real quick because I do think this is that important. Let's say you have a normal squeeze, a red dot squeeze, right? And you're in an uptrend. and then you go into a consolidation, right? So you have your consolidation here, and you're in a squeeze, a red dot squeeze, a normal squeeze. The idea would be it breaks out and starts trending, right? That's what you all expect. Very nice. Very predictable to some sense. With a high compression, your range will typically be smaller, so it'll look something more like this. Notice the range is tighter. It'll break against the range, and then if it's any good, it'll do that. So notice that there's a little bit of a character shift between the two. So pretty important stuff there. In terms of the IGV, so this is what I would tell you is the most important pattern in markets right now, and frankly in general. So where's your low on IGV? Well, you crashed into this level and then you bounced, right? Okay, so that allows us to say this is an important low, right? So you would draw a line there, and then you see how it comes back down and holds that level again. So the market knows that that's an important level. All you have to do is draw your line. But then here's the kicker. You see how it trades below the level, right there below the line, and then on the very next day it pops back above the level and closes above the level. That's a Wyckoff Spring, right? That's a bear trap Wyckoff Spring. This is the pattern that I've been showing in the room, and I've seen this pattern every single day on every single chart, 5 minutes, 15 minutes, all day for the last basically 4 weeks. Normally you would see this pattern as, maybe once or twice a week. I'm seeing it, multiple times a day nowadays, obviously on small time frames. But it is a very powerful pattern, and it is one that results in, moves kind of like that. Now, let me just spend an extra minute here. So you have the undercut, right? You have the break back above here. Okay, great. That then should take you to the top of the range. So here's your range high. Notice you go back to the range high. And then if it's any good, then even if it fails on the first test of the range high, which it usually will, and you can see in this example it did, it'll pull back usually about halfway, but in this case it pulled back to the cloud. And then on the second test is when it actually breaks out, right? So from this perspective on this specific pattern, IGV daily is the quintessential textbook example to learn this pattern. So pretty big. Put that one in your study book. It is that pretty, that clean. So looking around things, again, HYG, just looking to see if it's above or below 80. It's closer to 80 now, but I think this is due to a dividend. I think it might have paid a dividend at the end of the month. At the end of the day, it's above 80, so this is going to lean bullish. We don't have to make much more than that of it. If we go to the VIX next, so VIX here with the 1.6 handle, amazing, truly amazing that the VIX is trading at a 1.6 handle. Not really much to say here on this one. It's just one time framing. So as long as it doesn't make a high above the previous low bar, then why not take it to a 1.5 handle at this point, right? So this is completely aligned for the bulls as well. HYG was aligned for the bulls. The indexes were aligned for the bulls. Normally I don't look at dollar that closely, but I think if dollar goes up, that's actually a bearish sign for stocks in this instance, and dollar here is completely working for the bulls as well. So I don't see any issue there. Let me think of anything else that might be missing here. Let's look at something I never look at with you, which is breadth, SPX A50R. And it should have had a pretty big breadth push yesterday. And this is now working for the bulls. Look at that pretty buy signal there. That's nice. So what does this tell me? Well, this tells me that breadth could start to expand, and the potential that everything starts to participate is higher now. So it's a little weird to use the buy and sell system on a chart like this, because it's not really a trending chart. It's kind of like doing technical analysis on like the put call ratio. It doesn't make a lot of sense because it's mean reverting. But in this instance, I think it's actually not bad, because here it gave you a sell, the market crashed. Here it gave you a buy, the market rallied. This is kind of a middling number. Basically what this number means, so you might not be familiar, it's telling you the percentage of stocks above their 50-day moving average. right? So the higher the percentage of stocks above their 50-day moving average indicates that there's more stocks participating in the rally. Right now, this indicates that there's 57% of the stocks are above their 50-day moving average, right? So the buy signal here, to me, implies that this could mean that the market wants to then start expanding its breadth, meaning that perhaps things like that have really run super hard, like semiconductors, start to trade sideways, and then things like IWM and maybe software, IGV components, start to catch up. So we'll see if that plays out. But I'm glad I looked at this with you. I never looked at this chart with you, but I think this is a very interesting signal here and worth knowing about. So that one is still completely fine. Let's take a look at oil real quick, CL. I'm just trying to look at as many things as possible. This chart right here, by the way, before we go to CL, SPX A50R, that one is aligned for the bulls too, by the way. None of this should be that surprising to you, considering the amazingness of the rally that we've seen and the continuation. And then oil here is not giving too many signals, to be honest. So I would say that this one is the fact that it's trading with a one handle and the market is aggressively attacking 3 ATR new all-time highs is remarkable. Absolutely remarkable. I don't have anything else other than that to say about it, but it is really, really impressive. So I think the only thing left is to put it all together and then give you a trade for next week. Alrighty, so let's put it all together. So we looked at the indexes. The indexes are across the board. I think we don't look at the Dow, so I don't know if the Dow counts or not. But let's just ignore that one for now. SPY Max Bull weekly daily, Qs Max Bull weekly daily, IWM Max Bull weekly daily. Okay, all of that obviously is in the bull camp. HYG is above 80 even after the dividend. That's bullish. VIX with a 1.6 handle. That's bullish. The SPX A50R breadth chart that I showed you with a buy signal, that's bullish. The dollar trading below its daily 200, that's bullish. Bullish for stocks. What else did we look at? Oil's a little funky here. There was a time where oil was acting as like a VIX proxy. It's trading with a one handle. The stocks don't seem to care. I would say that one probably is neutral and is like just the tiniest thing for the bears would be the oil with a one handle, but very small relative to what the bulls have here. So putting all the pieces together, bulls have like 99% of the game locked up, right? We'll see how May plays out, but given the fact that the MAG7 chart that I spent so much time on explaining the slingshot high compression squeeze, given the fact that that chart has a weekly squeeze and is the most important chart that I personally look at, that tells me this market wants to keep going. So I would not be surprised we start to get, more reasons that it goes higher. Now, let me caveat it with this. We are trading wildly extended, right? By almost any metric, we are wildly extended. It has not mattered, but I just have to put that out there so you don't think I'm going crazy, bullish at, 3 ATR. Putting that aside, the fact that the MAG7 chart has that slingshot squeeze, and then the SPX A50R breadth chart that I showed you has that buy signal, that is a really powerful combination. Why is that? Because it's telling you that the MAG7 have juice on a weekly squeeze to go higher. That's like the generals. That's the most important, concentrated, and heavy part of the market is MAG7. And then the flip side of that is that the SPX A50R chart is like the soldiers. And that tells me that the soldiers are also ready to go too, right? So that is a really powerful combination. When you have the generals and the soldiers ready for war, that's a strong unit, to say the least. Let's look at two things here, and I didn't really find too many things that had squeezes. This might come as a shock when we're trading when the Nasdaq's up 20% in a month. But one of them that had a squeeze, it's just kind of very pretty chart, is ROS. So ROST. So on this one, I'm trying to buy the 220, 230 call debit spread, but I want it at a discount. Hold your laughter. I'm bidding 475 on that, and that's going to be for May. So I'm trying to buy the 220, 230 call debit spread at the daily 21. So I've priced it below the market. It will not get filled until it gets to the daily 21, which I've roughly priced out at 475 on that spread. It's the 220, 230, and that's going to be for May monthly. The chart speaks for itself, right? I don't have to say any more words. You can see how perfectly clean this chart is. Buy signals galore. And really all I'm looking for is just buy signals and squeezes, right? So in the same way that, you had a squeeze here and it was in a buy, boom. You have a squeeze here and it's a buy, boom. You have a squeeze here and it's in a buy, boom. You have another squeeze here, it's in a buy, boom. You have another squeeze here, right? So just rinse and repeat, rinse and repeat. Very straightforward chart. Trying to bid the 220, 230 call debit spread for May monthly at 475. The other one that came up, and if I was susceptible to FOMO, I would be feeling it now. Fortunately, that's one of my few redeeming qualities, is that I am not susceptible to FOMO. Although this is a big bar today. It's going to be LITE, L-I-T-E. And again, same exact thing, right? Very, very standard stuff. All I'm looking for is squeezes and buys. So obviously this one could use a pullback, but I don't think you go to 975 on this thing and not have it get to 1,000. So obviously the buy zone is a little bit lower, but in terms of finding you kind of optimal setups with squeezes, those were the two that came up. There's a lot of good setups out there. I think even something like Tesla could be actually making a bottom. I know that Henry on the team has been talking about that. TG has also been talking about Tesla making a bottom. I looked at it today in the session. I can see the logic. It makes sense. It's not an ideal chart, which is the only reason I'm not bringing it to you. But also keep that one kind of as a bonus pick as well. So the two trades would be for next week would be LITE and ROST on pullbacks. And then longer term, keep an eye on that Tesla to see if the guys are correct about it making a potential major bottom right around here. All right, guys, that's my time. So if you're watching on the YouTube, do give us a like. It does help us out with the algorithm. Drop us a comment. Let us know what you're having for dinner or what your pet's name is. My mom's cat named Colt had a groomer go visit him yesterday, and he bit the groomer. So while Colt is now clean, he is now in timeout for being a bad boy. So let us know what you're having for dinner in the comments, and I will see you guys in the next Friday video. Cheers.